Okay, it's another week. Another week done. So let's record a few thoughts on what's happened and what we are anticipating might happen. We're going to start with silver because that's what I was doing last week, that's what I was looking at, and it's what I'm trading. So I guess the test video went reasonably well because we're back again. We'll start on the weekly. So, here's the weekly in all its glory. There's the year of hell. We're still within the bounds of the year of hell, but, and it's a big but. As I said, if we can break, or we had broken rather, and closed above this pale green, this mint choc chip green, objectively the best flavour of ice cream, mint choc chip green trendline segment, and I was saying, well, this looks great, but we've got to be aware that we're going to come in for either a back test or the whole move will fail and we'll go much lower. So far so good. We've had this back test. We've back tested almost exactly this the mint choc chip line, and as I also pointed out last week, this 50% big thick fib I've got going on here. Beautiful confluence. This purple line going up to the top of the longer term fib channel is a measured move of this here, projected from this sort of low where we found buying this level here, basically. And it's total fantasy. Well, who knows, eh? $54 by September? That sounds pretty good to me. Fancy scenario, you know, in my dreams. But it is a measured move, you know. Move, consolidate, move. It's not completely insanely unrealistic. It's only moderately insanely unrealistic. But we'll see. If we think silver's queued up for a big move, a lot of people who are more into their commodity markets analysis than me seem to think it is. You know, if we can lean on their expertise as someone who's not some sort of macro genius analyst, then well, it gives us something to aim for. It gives us, you know, helps us maintain our positive bias, and especially considering we've had this beautiful, beautiful back test, as beautiful as you're ever going to get on the weekly. We're kind of making an inverse head and shoulders maybe on the RSI of unbalanced volume. We've closed positive on the RSI of ease of movement. We're above the 50. You know, head, left shoulder, right shoulder. And again, the right shoulder here would be kind of around the same level as the left shoulder. Unorthodox. I mean, this isn't the basis for my decision, but it just, you know, it's helping me maintain my bias and give certainty to one's trading, which you know, you need. So here we are on the daily, and there's the back test in more detail, and you can see just how lovely it was. To the level, one of the levels I was expecting. It's the most obvious level, but it's only obvious if you've got your chart mapped up in a certain way. I've seen on Twitter a few people putting in a similar line to this, but only in the last few days. No one's got this big 50% fib thing that I've got, and on a lower time frame, it's also, what's this? Sort of a sea green here going on, and it's a 23%. You know, the fibs aren't the be-all end-all, but it's the confluence. And if you see the levels hitting, you know, here, if they're cutting through, either hitting or cutting through key areas, if they mean something to the market, they mean something to the market. You know, don't force it, but you can. This is enough for me. This one captures the high here. This one captures the ultimate high of this nearer term. Yeah, this is just a daily time frame fib. So it's all looking good. It's looking green for go. But we also see on the daily, at the back test of the higher time frame resistance turn support, another positive reversal in the RSI of unbalanced volume, another positive reversal in the RSI of ease of movement holding green. It's all lovely. So let's go down to the 4 hour. Is the 4 hour just as lovely? Yes. So you can see the channel that I've put on here, this 3 trend line channel with the upper rail, the middle rail, the lower rail. I remember first playing with trend lines years ago, when I couldn't afford to trade because I was a student and things like that, a long time ago. Playing around with trend lines, and I remember copy pasting them and moving them around and going, you know, you can sometimes put one in the middle, you know, and that was I remember thinking, what's an innovation? But like so many things, you sort of kind of discover through mucking around for yourself on the chart. Someone else has already done it, but you don't know that, do you? Until you find, you know, years later, you find I can't remember who it is. Could have been Burak on Twitter. Again, big on these trend lines and like different rails, middle rails, and you know, just duplicating the trend lines and seeing what fits. And I was like, wow, you know, that was just something I discovered from mucking around. I didn't think too much of it, you know, because I just assumed I was an idiot. And it turns out it was actually quite a good thing to be doing all along, you know. That's the process of discovery. But you can see that we are now pressing against the top of this middle channel area. This is the big resistance area that was on the weekly, the daily. You can see it here on the 4 hour. Yeah. So next week, maybe the next 2 weeks at most, is going to be all about getting the hell through here and getting to round number, getting to here. The old highs from way back when. So from here to the round number at 30. That's going to be the next stop that we need to get to. So we're going to see, hopefully, strong upward movement continuing. Hopefully this was a 1-2 start of 3. And instead of retesting the lower end of the channel, we're going to see a breakout of the channel and an accelerating upward move, or steady progress. You know, breakthrough, retest, whatever. We could chop for this and then go up. But this needs to turn into support or just be shot through and left behind completely. That's the next step. Again, on the 4 hour, you see the reversal. On our weekly trend line and our weekly fib, you see not much on the actual ESA movement indicator itself or the RSI volume atomic divergence, but look, we came into it. You know, you're seeing this was the doji candle here, and you're actually seeing a very small divergence on the RSI of ESA movement. And you could have slapped a trend line down here as well. And I was actually the back test of the trend line. I think on the hourly, I had a trend line like that, and we back tested, and that was where I got in. Again, but mostly because of these weekly lines. That was the most important thing, because, you know, if they weren't going to provide at least a little bounce, then what, you know, something like that from such a higher time frame should always at least provide something, even if it turns around, you know, after a small move and dumps on you. You're going to get at least a reaction to get in on something, and then, you know, either it goes up or it goes down. That's life. We'll switch away from our more volume-based indicators because we're getting onto lower and lower time frames, and we'll just have a look at our RSI and our momentum indicators. Yeah, here. So here's the line I had on the hourly. I was getting in on this back test. I didn't give a fuck about this. You know, this was just a spikeroo coming down into, well, you can see the hollowness. You can see the hollow area. I guess Simpleton would call this the void. Filled it. You know, 1, 2, 3, maybe, potentially. So that was all good. You know, and it was a double bottom in price. It was a slightly lower low on RSI, and you know, this is just a completely ridiculous reverse. We're back at, you know, we filled this void on the composite index of RSI all the way back down. It's like it's initiating hollow. You know, we filled all this in and went back down to here. So I didn't give a shit that this came back down and retested it again. You know, I didn't think we were going to plunge. Strong bias. Got to maintain strong bias. You've got to believe in what you're doing. If you turn out to be wrong, it doesn't matter. What matters is the basis for your trade you believe in at the time, and that you were, not jumping in and out, terrified of every little uptick, downtick in price. So here's the resistance again that we're looking at, that cap price before, once, twice, back into back test, weekly, up. So let's see you go. Let's see you go. One thing I look at, or two things I look at rather, that are quite useful in terms of getting a picture of the wider market, is the dollar, like the dollar basket, and also this bond ETF that reflects what's happening in the sales of US Treasury bonds. Because at the end of the day, every asset in the world, it's kind of either the dollar or it's an anti-dollar asset. When the dollar's going down in varying proportions, anti-dollar assets, euros, pounds, stocks, it seems, gold, silver, whatever, they're going to go up. Commodities going to go up. Everything that is anti-dollar should to some degree, unless a correlation is broke for some reason, and whatever. But on the whole, so as long as the dollar is not putting in strong up moves, I'm a lot happier about buying silver. So this was a little bit disconcerting. Was that last week and then this week, these big orange candles, but they put her out, they split her out and don't turn into anything. And again, this looks like a back test of this, and maybe now it's ready to go down further. You look at the longer time frame, look at your weekly charts. Yeah, don't look. Let's not look at the indicators on this. This is the thing with the dollar index. It's being, it's such an artificial. It's such a derivative asset that you get this craziness going on with indicators. Well, volume-based indicators anyway. So let's just ignore that. So you can see we had the test of this big winter-spring 2018 accumulation block, accumulation area, buying area, and that was in January of this year. So this was months of buying that led to a move up. We came back into it and we got a move from 89 cents to 93 cents, and it looks like that might be it. That's all the bounce back. That's all the second bite of the apple that this area looks like it is going to provide, unless this is going to turn here and go whoosh, straight up. We're going to trickle down, we're going to go down, we're going to wiggle down, we're going to go down. As long as we're doing that, I'm a lot happier with continuing to go long silver, hold my longs, accumulate more longs with a view to much, much higher prices. Again, if this is an exhausted area and there's no more buys to be found, again, down we come, down we come, down we come. I had identified that sort of September window for the measured move in silver for my fantasy scenario. Why not 85 on the dollar index by September? Why not 83? That would do it, I think. Especially if we get a flood of money coming in from people getting the hell out of crypto, things like that. The other thing is, like I said, this bond ETF, this bond fund. Falling bond prices means rising rates, means presumably that's better for the dollar. If you're earning interest in dollars, you want dollar-denominated assets that pay dollar-denominated interest. And it's bad for metals, it's bad for anti-dollar assets, is how I read that. and we've seen huge decline, big decline. Silver's been consolidating this whole time. So even in the context of this happening, so again, that's another sign that we shouldn't be too worried about going long silver. And then we put in lows here, again just a month ago, March, April. And this was a pre-identified zone. This isn't after the fact. Marking up I'd identified this, and there it was. It came into this key area of buying here that led to this just ridiculous vertical move. It was a top, it was a cut through, it was a top, it was the bottom of this demand zone, which then cut through powerfully, it was a bottom, and it was like a little doji, spiky thing, doji, you know, support, resistance, cut through, cut through. So it was a void of action either way, filled, buying orders, massive buying, testing again. So we knew it was important. We knew it was important. At the lows, you can see divergence on bullish divergence on the RSI of unbalanced volume. You've also seen it on anything else you chose to look at. You could have put in a line there, bought the breakout here. You could have put in a more precipitous line here, you know, and then this would have been the back test, so that this would have been the back test. These lows here, the back test of this trend line breakout. You know, whatever you like. You can see the positive divergence building on ease of movement, and you see it more forcefully on the RSI of the ease of movement. So the absolute lows here and here, significantly higher than here. And we put in a positive reversal here. So if bonds continue up, that'll be extra good news for buying silver. But the fact that we had this, again, big down move, didn't bother silver too much. If it just chops around and goes nowhere, if it goes a little bit lower, doesn't seem to be a reason to be unduly concerned, although maybe it means there's better things to trade than silver, but it doesn't give you undue cause for concern, I don't think. I'm going to have a little look at some stocks. Well, let's look at anti-dollar assets. I pointed out on Twitter that this was the key daily level for GBP USD. Having looked at silver, I thought, well, I'll look at other anti-dollar assets and see if there's another sort of daily or weekly level that would serve as similar support that we were looking at with the mint drop chip line and the big 50 fib. And I figured it was this for the GBP, and we tested it, we bounced. It wants to get over this long-term fib here, a very long-term monthly fib retracement line. It wants to get over this, otherwise we're coming down here, at least. But it does pay to look at across markets. You know, you see the similarities and the differences. And it's something leading, something giving a hint, something giving a clue. There it is, there's that line. There's the big fib, which is also the bottom of the head and shoulders. That was the distribution for the move down. Beautiful. Beautiful, beautiful price action. It's always the case. I tried trading GBP, USD, and the moves were just a bit too ridiculous, and sometimes price action was just a little too messy. What that means is, in practice, I was trading too heavy. If I'd been a lot lighter, but that's true in all things, all markets. Volatility and messy price. It's only a problem if you're in too heavy for the price action that it's displaying. So who knows what will happen here? We'll see what next week brings. Euro, kind of sort of similar. This was last week. Again, that's a big weekly channel line. So we actually put it in the week before, and then this was a test of, again, this sort of black pivot line. You can see here it was a level, 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 here it was right in the thick of these dojis, and it was sort of back tested. Here it was a level, here it was a level, here it was a level, and here it was a level again. It's $1.25.6. So we're seeing similar things across anti-dollar assets. Let's look at the Nasdaq. This plunge got some people very excited. Well, look what happened. We came into these dojis, we came into this demand area, and we've bounced. You know, we're above this pivot, this key pivot area here. We put in a positive divergence on our RSI Visa movement. On the daily, you go down something like, let's go down to the 6 hour. I love the 6 hour chart. I won't, for like these volume based indicators, I mean sometimes I'll go down to the 4, very occasionally the hourly, but you know, it tends to be that anything more than the 6, anything less than the 6, sorry. So you see a teeny positive divergence here, you see it on the RSI of Visa movement, you see it more clearly here, and here. I do think the lower time frames you go, the less reliable they become. And then it's best to just use price action or traditional momentum indicators to refine entries, things like that. If we look at the S&P, we've got a daily channel line, so these are going way back. You see they're serving as sort of the rooftop here. You see them cutting through, above, below, test, breakthrough. So they've proved their importance. We came right down into them, little spike below this doji here. But again, there's the positive divergence, and we've shot back up again. There it is on the daily time frame. Where from here? Well, anything below 42.03 is suspect. Maybe this is a 1-2 plummet to death, or we'll chop, or we're going to rock it. I don't care. I'm not trading the S&P at the moment, but this bit here was a fairly safe, fairly predictable buy. From this point, I mean, I would think you'd want to take some off, but yeah, that was the trade. The obvious trade anyway, and it needs to be obvious for me, because I'm a dummy. And you got to trade like you're a dummy. And you know, it's like the opposite of driving. When you're driving to stay safe, you've got to assume, you know, you're a safe driver, but everyone else on the road is mad. When you're trading the markets, you've got to assume everyone else is smart, and you're the dummy. So don't try anything too clever. It's trying things that are a little bit too clever that will destroy you and fuck you up. Be dumb. Keep it nice and simple. Here's the FTSE. I remember back here in like March, I kept trying to buy the thing. Or was it? I think it was all year. I think the whole period I was trying to buy the FTSEs like a swing long was this nightmare box. And then I gave up and started getting more into silver. But look what's happened. Look at these lows forming right on the top, or near the top, this range of hell, or this old selling here. Look at this pivot on the old selling. The old sell area becoming a buy area. So, you know, I endured all this pain, and they got rid of me. I washed my hands of the FTSE. What happens? It does this, and it's pretty beautiful. It's absolutely typical, isn't it? Absolutely typical. But again, where was the obvious? I mean, again, this isn't something that I've just marked up. This has been here for a while. Where was the obvious buy? Where was the obvious buy? Again, the obvious trade's done now. We're here. That's not an obvious anything. You want to get out of something. Well, I would get out of something and hold something. We could easily come back down here. Or we could, again, that could be 1, 2, 3. You know, we don't know. Let's just have a look at Bitcoin for fun. It's always fun looking at Bitcoin. There's a backtest on RSI, you sometimes see those. What's this? The 6 hour? It looks like it's trying to put in a bit of a low. You know, we've had a fairly precipitous fall. I know the thing's up a ridiculous amount on the year anyway, but we've had, yeah, technical bear market. You know, the most recent, I feel like Bitcoin should have a sign on it, no bear markets since, you know, the last 20 days, or what happened with, the moves are so extreme. You get full-on bull markets, technically defined, and full-on bear markets, seemingly every couple of months, every month maybe, I don't know. Yeah. These work a bit better, these indicators, on something like Bitcoin, because the volume is just like, I think it's implied, or it's sort of tick volume, it's sort of an aggregate of volumes from exchanges, and it's all sort of fake and synthetic. So it smooths out the indicators compared to using them on lower time frames for other assets, but God only knows what does to their reliability. And it kind of works, you know. Alright, so that's that. Let's end it.